Dalal Street snaps its three-week gaining streak amidst India-Pakistan tensions. The Nifty, the Sensex and the mid-cap index all end with cuts of over 1% each, while the Nifty bank slips almost 3%. On today's edition of the Editor's Roundtable, we take you through the week's market action, put the spotlight, of course, on the big national story, the cross-border situation, and we tell you why defense stocks obviously are up, and decode the April mutual fund data, which has some positive trends as well. I'm Surabhi Upadhyay, and with me, as always, on Editor's Roundtable, Prashant as well as Nigel. It's been a difficult week for the forces and for the market as well. We've had to digest all of it.
But first, I had to say that it's good to have four here, right? Last week I was not there, and I was watching on I think YouTube.
Yeah.
I could see a triangle.
It was a triangle. Three-corner discourse.
Yeah, but I think we have me here to not make it a triangle. So, but I think Surabhi, it's been a tough one, right? I mean, it's so much news flow, and this latest one, of course, is I think is something which we have to just sort of get through. Yeah. But we've done so remarkably so far. And when I say we, I mean we as a country, and the forces, etc., responded adequately and forcefully, but even so in a calibrated kind of a way. And I think the market has not done. Markets taken note, but it's not any. As I was saying earlier on closing bell as well, we are down about 1.5% for the week, which could be any other week.
Absolutely.
And second, there is no. It's. Of course, if you're trading, you'd stay away from sort of, getting hit by overnight risk, because a lot of the action happens overnight, but there's no determined selling or anything. Yeah. You were mentioning in the morning how the foreign flows, etc., is positive, even yesterday.
Yeah, up till yesterday, at least, those numbers were positive. We'll see what the next few days bring. Yeah. But it hasn't been too bad. Mihir, let's get your opening thoughts.
So I think the market's been, I think, acting in a very mature way, especially the foreigners, I'm surprised that we've almost had 15 consecutive days of FII being net buyers after a long, long time. So we had one of the longest selling streaks, and this is one of the longest buying streaks on a daily basis as far as FIIs are concerned. Currency has been remarkably stable. Yes. Normally, in terms of geopolitics, when these kind of things happen, the currency is the first to get impacted, but our currency has been stable. FII flows have been positive in spite of almost 10 days having passed since the Pahalgam incident, more than 2 weeks. So I think what I think is that the markets now realize that 2 or 3 things have happened in the last 20-30 years. One is that the markets have seen such incidents. So this is not the first time this is happening, starting from Kargil, the Pokhran blast, the parliament attack. And we have seen that the long-term in the short-term macroeconomic impact of these incidents is nothing, right? Second is, India as a country has become much larger in terms of economic size. Yeah. So the outlay required to counter such things is also a very minuscule portion of the defense outlay, very minuscule portion of the GDP per se. So as long as we don't see anything changing in the long-term macro picture for India, which is getting stronger and stronger every day with forex reserves, trade balances, current account, etc., I think we are in a much better position compared to 30 years ago, and this is what the market is appreciating. In fact, even before this incident, I was going around and we are all discussing that the Indian stock market volatility is now lesser probably than the US stock market volatility, right? Yeah. And volatility is a function of uncertainty. Yeah. So the stability of the Indian macro is, I think, manifesting itself.
And there were some good things that happened this week as well. I mean, on the macros, on the global front, we had the UK trade deal. In all probability, I mean, the US negotiations seem to be moving, and after... we're supposed to be one of the top 3 countries in terms of the first to sign a deal.
I think UK jumped the line, but it's very much. I think President Trump has said many times in the past that India is first up to get that deal. Yeah. And the FTA with the UK FTA, our FTA with the UK, I think that's significant as well. And
and don't forget, besides the global backdrop, I think a couple of earnings positive numbers as well we got. On a day on Friday when the market's a little bit jittery, yet you had Titan that was up. It's not a cheap stock. L&T, which is a barometer sometimes of the country's GDP as well, that as well did well. So select earnings reactions were good. From the broader markets, there were many to name, right? CCL Products, RR Cable and the like. So there were some earnings surprises that we saw. Yeah. And I like that, because ultimately the markets will follow what earnings are, what fundamentals, and how the economics of a country are shaping up. And at least in those segments, we are doing quite well.
But I think we need to watch a little bit more, because at an aggregate level, since the quarter started, I think we are there's been about a 1.5% earnings downgrade to the overall earnings season. Maybe it'll improve from here on, but you're absolutely right.
Yeah,
I think with L&T, I was just wondering, I don't know if it's true, maybe Mihir can answer, is it defense? Because, the reason why Friday was a big...
The thought crossed my mind as well.
Just one more point with regard to the earnings is I think the street, irrespective of what came out, if it wasn't going to be too bad, it was already in the price.
Right.
Yeah. And the commentary of many of the companies are suggesting that the next couple of quarters will be better. So I think the street is prepared for that. Weakish Q4 with some earnings surprises, and hopefully things will pick up from here on.
Absolutely. I think...
L&T, let's go back to that question because, well, to be fair, you couldn't find fault in the numbers also, whether it's the order book, what they're talking about, margin guidance. And the thing is with L&T, after many orders, at least margins weren't a disappointment, right? Those legacy orders. It seems to be coming under control. Your thoughts?
I mean, can't comment on stocks, but I do think that even now as we speak, there is some traction in the local spending. But in the company that we are discussing, the traction is still more on the global order book side, not so much on the local order book side. But having said that, if you notice in the month of March, you did see a lot of pending orders being released by the Indian government in terms of infrastructure, road construction, etc. So the hope is that last June quarter and last September quarter had low base effects. Because the government machinery, was in a sense of doldrums because of the elections. So we have a situation where the June 25 and September 25 quarters will have a favorable base to start with in terms of the government ordering. And if the border situation continues, then we might see some extra ordering on the defense side.
Yeah. Actually, I would put it like this. You got actually a lot of stuff going into the mix, these positive, lesser amount of trade deals, but more positive. Because there's FTA, oil, which is down $10 since the end of the last quarter. Yeah. But the only thing which has got to fire as of now is earnings. And as you said, maybe over the next 2 quarters, that will also come. Kab tak nahi hoga, right? Earnings to aani hai. So I think we'll see. But let's...
every year we say second half will be better, right?
That's my real problem. I'm almost tired of reading note after note. You start with tall expectations and downgrade. Next quarter, downgrade. But the second half will be better. Next quarter will be better.
Look at where the market has reached. 25,000, right? We're having this kind of a thing. But, we'll see. Let's focus on the big story for a quick bit. Parikshit is joining us from Delhi with the latest situation, right, as we head into the weekend. And I think people are going to be only watching this, nothing else, about, what really is going to happen from here on. Parikshit, give us a state of play, how things are now and what to watch out for.
Clearly the Indian government and the armed forces are making contingency plans. Today, a very important notification came out from the Ministry of Defence, and that empowered the Chief of Army Staff to call in the Territorial Army. So you can call the Territorial Army a group of reservists, and there are about 42 battalions in the country, and the Defence Ministry has now empowered the Army Chief to call them, if necessary, to supplement the army, the regular army, and national security purposes. That indeed is significant. Over the last 24 hours, we've seen Pakistan using multiple drones and missiles to carry out attacks on military bases in Jammu and Kashmir and other places along the border. They have not been successful. We have very successfully targeted and brought down at least 50 to 60 drones on the Pakistani side. And we used almost every air defense system in our arsenal, from the cutting-edge S-400 defense system, which is one of the best in the world, to Akash surface-to-air missiles, from the Barak missiles, the L-70 guns, air defense guns as well, and anti-drone technology, which is used to disrupt and bring down drones as well. So that operation continues. Operation Sindoor is definitely not over. We're looking at heavy artillery shelling along the border. We're also seeing a situation where Pakistan is trying to infiltrate into India. This happened in Samba district of Jammu and Kashmir, and the BSF, the Border Security Force, successfully eliminated 7 terrorists and also damaged the Dandar post of Pakistan. So we will have to wait and see how things go on over the next few hours. India is trying to make sure that our actions are aimed only at Pakistan's escalations. We have been saying that we don't want to escalate, we don't want war, but if Pakistan tries to do that, we'll have no choice but to respond. So even though there will be times during the day when the situation will be calm, We cannot say that the operation is over because things may intensify over the next few hours. So it's going to be a few days before we have any clarity on where this is going. And that's why these contingency plans on continuing this military standoff, eyeball to eyeball confrontation will continue.
Okay. All right, Parikshit, thanks a lot for that. Well, in fact, even in terms of a stock market move, this week belonged to really the defense stocks as well as the shipbuilding stocks, and a few factors that played out because of the ongoing, conflict that's going on the borders. Now, a few factors that come to mind. India has showcased its equipment, and these equipments have now been tested as well. So the equipments basically have proven that they are battle ready and battle worthy. Till now, it was just a spend and it was just equipment, but now they're proving that it's battle ready. Not just that, besides the domestic tailwind, you'll also have the export tailwind that could come about. In fact, we have Mr. Rajnath Singh, our defense minister, that spoke about the export opportunity could go to around 50,000 crores from around 25,000 crores odd by 2029, 2030 itself. So it provides an export opportunity as well. A few of those products should come up for you on the screen. That's produced here in India by BEL, BDL, HAL, Solar Industries, as well as Premium Explosives. All of them, a few of those products should come up. And in terms of valuations, one part of the street has always been saying that these stocks actually are relatively expensive, in spite of them pulling back 25 to around 35% from the top. While now you have a tailwind that's there, because the domestic story is strong, there could be an export opportunity as well. So earnings could see a good amount of traction in the years to come. Mihir, tell us, in the money that you manage, what kind of exposure do you have to these defense stocks? And would you be looking to increase now? Because it appears there's a big opportunity at stake.
So Nigel, we've always been positive on defense for the last many years. In my current company, which is of course a little above a year, but even in the previous camp, we were always bullish because we saw the structural opportunity, not only for domestic production, but also for exports. The crux of the matter is that we were hardly manufacturing, domestically, say 5-7 years ago, and there was no exports. And now the government has clearly laid out a path where 80 to 90% of the defense procurement has to be indigenous by 2028 or worst case 2030. The numbers we are talking about is exponential in nature. We spent about 3 lakh crores on capex, in defense capex, out of which after so many years of effort we have managed to produce about 1 lakh for domestic procurement, that was FY25, and 25,000 crores exports this year again against 0, 5, 7, 10 years ago, right? The point is that our defense capex of 3 lakh crores also grows by 8 to 10% every year, right? So this 3 lakh will go to 5 lakh or 6 lakh crores in the next few years, and 80 to 90% of that will have to be indigenously procured. This is absolutely laid out product by the government, right? So this 1 lakh crores of domestic procurement can easily go to 3 to 4 or 5 lakh crores over the next few years. So really we have a compounding story of total addressable market for the domestic procurement only. If you add exports to that, then it's a blue sky, right? Because export is the total defense spending in the world is in trillions of dollars. And you have many small countries, hundreds of countries, we don't have their own defense, and they buy from global suppliers, and India obviously is much cheaper compared to most of the others, and India is a credible, reliable source also. So I think the runway of growth for this segment can be really long, and we can see a compounding story over the next many years.
I want to ask you a quick follow-up on this if you hit a break, but this is something on my mind. The runway of growth and the story, the opportunity has been well documented. I don't think anyone can really debate that. What my question is, the only problem with defense or a lot of these capex-heavy industries was the volatility in earnings and the lumpiness, because that's the nature of their contracts,
Correct.
right? Are we in a new sort of a framework where the market is going to be a little charitable or maybe look beyond that quarter-to-quarter lumpiness and focus on the story, which is very strong? Will there be a different perspective on defense stocks?
So it's already beginning to do that.
Yeah.
For example, in some of the defense stocks, the order books are large, but the earnings have been flat for the past few years.
True.
That's because the order books are yet to be executed. In cases like shipbuilding, aircraft carriers, submarines, companies who are doing those kind of things, or aircrafts per se, the order book will be large, but the execution will be over a period of time.
Yeah.
But as long as the order book is secure, which it pretty much is, the markets will look at the future.
The money will come eventually,
money will
whether
come,
it's this
absolutely.
quarter or the next quarter.
I mean, the 3 lakh crores is the capex or the total budget? Because a large portion of the budget usually is for salary.
That's the hardware
pensions.
procurement. That's
the investment budget. Defense
The
investment
annual
budget.
hardware procurement, 3 lakh crores.
That's a very large number.
And Indianization would be 30% of it.
as of now.
30%.
It needs to
as
go
of-
to 80-90%,
80,
as Amir said, over the next few
Massive.
years. We'll take a quick commercial break here. We're going to come back and Surabhi will talk about the flow numbers, mutual fund flows, and they remain very strong, SIPs especially. We're back with that.
Welcome back. You're with the Editors Roundtable. Now let's focus on the monthly mutual fund data that came in for the month of April. Actually, the picture is not bad. The headline will look a little disappointing because if you look at it, it's the 4th straight month of decline in terms of the net equity inflows that have come in. So if you see that bar chart, it's been declining and it's come down in a big way from the peak of 41,000 odd crores that we used to get back in November and December. So no denying that. The reason behind this decline largely is the fact that the NFO party that the mutual fund industry was enjoying, that has completely fizzled out. In fact, look at this is paltry, 350 crores. That is how much mutual funds have garnered through NFOs or new fund offerings this year. Just 7 NFOs, by the way, in the month of April. However, the rest of the picture, like I said, is actually pretty intact. Flows going into large cap funds, mid cap funds, small cap funds, not too bad at all. Large caps, in fact, at 2,600 odd crores, fairly steady. Ditto for mid cap funds. Small cap funds have actually done better. Remember, the market had rebounded in April. So the investor interest in this side of the market is still very much alive. 4,000 crores came into small cap funds in the month gone by. Let's now talk about the hybrid category. For me, that really stood out as a trend. Clearly, the market is volatile. There's a lot of uncertainty. And it seems that investors are willing to put some money out there in hybrids to sort of balance it out, asset allocation as it's called. This figure, 14,250 odd crores, is the highest that we've seen in the hybrid category in the last many months. Clearly the highest in over at least 1.5 years or so. So hybrid is one important trend. The SIP number is rock steady and solid. No problems there whatsoever. 26,630 odd crores. That's the highest SIP contribution that the mutual fund industry has gathered. The industry bodies also clarified that they've been undertaking a cleanup exercise of sorts of shutting down the SIPs where flows are not coming in or very paltry. So that's something that's underway as well. By the end of it all, the total AUM of the industry has inched up and it's now almost at 70 lakh crores. So that's a sizable and hefty number as well. Mehri, let me ask you about this, and this is really the question that I had in mind. There's no denying the fact that the monthly firepower that MFs were drawing in on the equity side, that has come down, right? Because from, like I said, 40,000 crores, now it's about 26,000 crores. Could this become a concern for the market in terms of just, having enough liquidity, having the strength to go in and buy at some point if this trend continues?
Liquidity, I don't think it would be a problem immediately, frankly, because mutual funds are sitting on cash that you can see at the end of every month. Yeah. The good thing is now, while NFOs have slowed down and the net equity number probably has slowed down a bit, you have FIs jumping into the fray, who were absent for a while. So I think something comes up. I think India is a lucky market. Everybody like India. And I would not be too concerned. As you rightly pointed out, most of the delta, the negative delta is because of NFOs. But that is a function of sentiment, right?
Yeah.
The markets have not done. Yeah, market
NFOs are back.
Absolutely.
I just want to, guys, take note of the news which is coming in. It's Friday as well, which is the fact that that Yes Bank deal has finally gone through. And I don't know if Mihir wants to offer generally a broad industry comments, but
when it rains, you were just saying, right? So much news in the market.
I'm not going to put you on the spot, but the news is. Let me just sort of quickly address this. So, Sumitomo is essentially going to buy. This is Sumitomo Mitsui Banking Corporation is going to buy 13.19% stake of Yes Bank at 21 rupees and 50 paise per share. For a consideration of 8,800 odd crore rupees. So that is news which is coming in and breaking right now. I think this has been talked about for quite a while, and there are some estimates that suggest that this is meaningful to SBI's
PAT.
F526 PAT. Could be as high as about 10%, 8-10% of F526 SBI earnings. Which are projected for State Bank of India. So I think it's a it's a big deal in that particular sense.
I think back of the envelope calculation,
Yeah.
the 8 to 10% would be if they sold the 20%. I think since they've gone and sold it on 13% approximately, so it could be maybe a little less than that, but it frees up some capital as well, and they'll make a gain because they've acquired these shares at around 10 rupees.
Yeah.
So it's a good gain that they'll be getting out there. Meet, you want to comment on this, this transaction, and what does it do? Because suddenly now you have a lot of interest in some of these banking names as well.
Absolutely. So I don't want to comment on this transaction per se, but overall I think it's a good affirmation of the faith of the faith in the Indian banking system, I would say. And you had a situation where there was a crisis a few years ago, and all the players in the system, whether it's the regulators or the industry, they came together and fixed it.
Yeah.
So I think it's a good example. It kind of gives a lot of confidence in the India banking system and the India growth story.
Okay, I think we'll leave it at there. Mayor, thank you very much for dropping by. Appreciate your time here on
Always a
CNBC-TV18 and the program as well. Thank you very much. I think we can wrap up things here on this edition of Editors Roundtable.
Absolutely. It's been more than a busy week. Plenty. As we wind down this session, of course, we are hoping that things normalize, stabilize a little bit. We'll come back and pick up the action bright and early on Monday morning. Till then, keep watching. News and updates continue on CNBC-TV18.